A very good morning to you all. You're most welcome to today's market snapshot. I hope you're all doing well today. Let's give it time for people to get on. We have a lot to go through today. There's so much to discuss. We have quite a number of developments in the global markets. So we have quite a bit to go through. We're just going to start with going through the oil prices to see the different increases in some of these different commodities. Morning, Jack, you're most welcome. So as you guys can see there, we seem to be getting into a period of potentially high inflation globally. Inflation most probably is coming back to haunt most of these global economies. Good morning, Humphrey. So as you guys can see here, if you look at crude oil, US crude oil, as you can see, is up 6% on the month, 6% on the month, about 6% on the year. When you look at Brent is up about 2.92% on the year and about 5.67% on the month. Okay. The prices, as you can see, seem to be skyrocketing quite sharply. Natural gas, again, is the only one that is down about 8.55% on the month. Gasoline, not doing too badly, up about 0.5%. Heating oil up almost 7%, so, we seem to be having an issue of where commodity prices are starting to rise. I know most of you that are joining in within the East Africa region, those of you that are here in Kampala, Uganda, and of course, even if you're joining in from Nairobi and any other part of East Africa, you may witness we are having an issue of actually rising prices. Prices are starting to skyrocket, and we need to brace ourselves. Okay. When you continue down to coal, as you can see, coal is up 13.75% on the month. When you continue to ethanol is up 3.6%. Propane are not doing too badly, but methanol is up 9.99%. Okay. So we are getting quite high prices there. Okay, so the other thing that I also needed to mention before we go into the market outlook for today, I just needed you to also look at the US crude, the US crude strategic petroleum reserve stocks. As you know, what happened last year, and actually what helped oil prices to start stabilizing, was Biden had to release oil from the US's strategic petroleum reserve. And the issue now is that ever since they released oil from these reserves to stabilize the rising oil prices, especially over in the US there, those reserves have taken long to be placed back into the reserve. And the data that we have been getting, those of you that have been seeing the data we have been getting from on crude oil inventories every Thursday, you notice that we're actually having negative stockpiles coming in. And of course, the consensus now with OPEC is that they want to extend oil cuts into the end of the year and possibly even into 2024. So next week, you know very well that we have US CPI coming out. Now, US CPI, I want to focus majorly on the headline inflation. We are most probably going to have a situation where we have headline inflation actually higher. And the issue with that, the reason for that is because August has actually been a month where we have seen global oil prices rising. And not only that, pump prices also in the US are right now at they're at a level not seen since around November last year. So this, of course, is something that we are closely watching. And if you're trading the Canadian dollar, if you're trading oil, if you're trading anything essentially that touches on this, you're most probably going to see some kind of turbulence in the markets coming into September, of course, providing us a lot of potential for us to trade and be able to benefit and make some money. So this right here is essentially the strategic petroleum reserve, and you can see in the US they do not have that much oil available in their reserve, which could likely have an impact on the prices of oil as we go forward. So the other key news that we have today, which has just come out, is something regarding the intervention on the yen. The last time we had an intervention on the yen was around October 2022. And essentially what happened is that when the Bank of Japan intervened, we had a very huge gain in the value of the yen. So if you're trading anything that has the yen in it, so if you're trading USD JPY, Euro JPY, anything that has the Japanese yen as the quote currency, keep in mind, you could see some potential turbulence on that one. And the issue with it is that essentially the yen has been suffering quite a bit of losses in the forex market, and that has been because they currently have a stance of where they want to boost inflation in Japan. So that, of course, is taking a big bite on the value of the Japanese yen, and most of what we are getting from the Ministry of Finance in Japan, and also what we are getting from the Bank of Japan, is that they are potentially going to intervene where there's a chance. Okay. So if we go over to financial juice, we are seeing some comments coming in from Japan's Chief Cabinet Secretary Matsuno, and he indicated that we will respond appropriately to FX moves if necessary, without ruling out any option. Okay. The other thing that we also have is that Japan's Chief Cabinet Secretary Matsuno, we are watching FX moves with a high sense of urgency. Okay. So this is something that is on their radar, and we might see some intervention. USD JPY had a bit of intervention when it reached the level of 150 yen. That was around October last year. And essentially what happened is when we saw USD JPY reaching that level, there was an intervention that came in from the Bank of Japan. And essentially what happened is that we saw a very big spike lower coming in from the Bank of Japan. So it's something that it's on our radar, and we have to keep monitoring there. So we don't have that much news coming in today, just a few comments coming in from the ECB. The ECB has been indicating that they could potentially have a rate hike later, but the only issue that we're having is the euro. Currently in the eurozone, the financial conditions are actually quite tight, and we have also been getting some news coming in even from the UK. They are putting out calls for financial distress. There's calls for financial distress. If you have any people who are staying in Birmingham, or anyone who is staying in some of those big cities, they're actually undergoing a lot of financial distress. So it's something that we're also monitoring, and we have to see how things develop as we go along. Yeah, Jessica, you're most welcome. John, you're most welcome. Ivy, you're most welcome for joining. Lucy, you're also most welcome. Okay, so to kickstart things, we're just going to go through our calendar for today. So today, the main thing that the main things that we have on our calendar for Asia session, we got some data coming out from AUD. As you can see there, we had GDP. So GDP, much as it came in higher than the forecast, we can see that the reading actually came in lower than the previous, but it's still in green territory. However, yesterday we got some data coming out from China, which was the Keikin PMI, and the Keikin PMI actually came in lower at about 51.8. So much as it's above the base, which is 50, we are still having quite a bit of China slowdown, and that is also affecting most of the Asia currencies like the New Zealand dollar and Australian dollar, and it's something that we are monitoring. Possibly, we should see the markets reacting a bit to that. So the other thing, of course, that's on our radar is, of course, as I've just alluded to, I've mentioned that we have high treasury yields that's over in the US, and that's why currently the dollar is thriving on higher valuations, and the higher yields is potentially allowing traders to move over to the dollar because of the higher yielding USD assets. So if you're trading the USD, we're having some bit of upside movement from there. So Germany, which of course provides a lot of value to the euro, and again also, as you know, Germany is one of the biggest economies in the eurozone. There has been quite a lot of data coming out from Germany indicating that first of all, of course, Germany entered a technical recession about 2 months ago, where they had negative GDPs, quarterly GDPs for about 2 months straight. And most of the data we have been getting out earlier this week, we had trade balance data that got out. And that trade balance data, we saw a drop of trade balance from about 17 billion to about 15 billion. So we are seeing an issue of slowing economic progress in Germany. And we also know that it's not only Germany that is also facing the issue. Netherlands has also been in a recession. Sweden is also facing a lot of contraction. So we are seeing that developing trend. So today, we don't have that much data coming out. The only thing that is really biting markets right now, and the catalysts for the rest of this month, and possibly even into the rest of Q3, up to October, rather up to end of this month for Q3, is the rising oil prices. And again, like I've alluded to, next week we have US CPI, and that headline number for CPI, you could be able to, don't get surprised if you see a very high US CPI number next week, simply because August has been quite a bit of a strong month for oil. So going later into the day-to-day, as we progress into the US session, we might not expect that much data. The main data that we have to wait for is the trade balance for the US. We need an indication of where trade balance for July was. Last week we had GDP data that got out from Canada, and Canada's GDP was actually negative on the month, and still, much as it was not negative on the quarter, it actually contracted to about 0%. So we're having an issue of stagflation coming in, where we have zero to almost no growth in most of these advanced economies, and also an issue of high inflation. So that, of course, is something that is plugging most of these economies, like the Germany. The US, I think, is the one which seems to be standing resilient, having indicated actually stronger inflation that we got out from the US, that one got out from around July. We saw that the US inflation is actually 2.1%, the GDP was 2.1%, and the US inflation was at 3.1%, closer to the Fed's longer term target of 2%. But the other economies, inflation is high, and of course, the economic growth is close to zero and contracting. So we have an issue of stagflation. Yeah. So later in the day, we have the PMI for S&P, Global Services PMI. The PMI data, the one that we got last week, which is the non-manufacturing PMI, actually came in at 50, and slightly around 50, between 48 to 50, which is indicating that the US is still having resilient growth. And of course, on the back of slowing inflation, the only thing that is going to put a stop to the dollar rally is going to be if we get lower inflation next week, which I don't anticipate happening, especially on that headline number. The inflation is most probably going to come in hot. Today, later in the day, we have ISM manufacturing PMI. Those are services PMIs. They are coming out at 5 p.m. So we have to wait and see where those PMIs are at. The previous PMIs we have been getting at about 52.7, and forecast is about 52.5. So we have to monitor and see what happens there. Most probably, we are going to get a number not so far from there. The services sector has been quite resilient, and of course, when you come and check the performance for those different sectors, you can see that some of these sectors actually have been doing quite well. I think aside from just a few others, like consumer defensive and utilities, most of the cyclical stocks seem to be doing quite well. And of course, most of those sectors, the reason why those particular sectors are doing well is because of good business. Energy, of course, is thriving majorly on the back of rising oil prices. So now, the last time we had oil prices rising, that was around between July to around October last year. I'm sure most of you are aware that even in Kenya and also in Uganda and also in Tanzania and within the East Africa region, we are seeing really high fuel prices. The pump price at most of these stations was high, and but again, for the companies that are dealing in oil, most of them are thriving. So even now, we're having actually only energy companies benefiting from these high prices. When we go to the 3-month relative performance here, you can clearly see there that energy, consumer, and industrials are doing quite well there. And technology is actually doing well, up about 6%. Yeah, so the reason why I brought this up is just to show you that actually some of these different economies are actually doing quite well, simply because of a strong business. So the US seems to be quite resilient, and of course, most of the data that we have been getting on the PMIs is showing us this. So we have quite a number of Fed speakers that have spoken, and most of the Fed speakers have still not mentioned anything about the oil prices. Most of them are switching over to a dovish stance. And again, that of course is providing dollar a lot of potential move to the upside. The only thing that is plugging markets now, and one of the major catalysts for this quarter, is the rising oil prices. So that of course is likely to affect many of these different assets. So I think at that point, I think we can cross over to the charts. But also just to mention, for those of you that are trading the Canadian dollar, keep in mind we have the Bank of Canada rate statement later today. They will also have a conference where they will provide the rate outlook, as well as also provide a general wrap-up of the economic outlook for the past time since they had their last meeting. And we also have the Fed conference coming in later today, rather not later today, sorry. The Fed conference is on the 20th of this month. So keep in mind the major events we have, first one being the US CPI coming out next week. We also have the Fed conference on the 20th. The last time the Fed met, they indicated that they are going to majorly stay data dependent, and the data that's going to come out is going to provide the Fed a lot of decision making, and when they have their next meeting. Remember, when they meet, they have 2 meetings, and where they decide and they vote on the rate hike that they are going to take. And of course, the latest that we got from the CME, if we check the CME Fed Watch tool, we are seeing that it's likely that we are going to have the rate hikes remaining as they are, where they will be kept on hold. However, if we get a sharp inflation number next week, I suspect that we're going to get a very strong change in this Fed Watch tool. And we could see the dollar having a very unprecedented rally this month, which might go even into October. And the only reason for that likely happening is this Fed Watch tool here. Remember, the Fed said they are staying majorly data dependent. So they are waiting for one thing, which is the inflation data. They already have GDP data. They are getting PMIs that are coming out. But that issue for the rising oil prices is now what is going to plug markets and what is going to be on the tool. So what this means here, what we are seeing, right now the markets are saying that we are not going to see a rate hike. Any rate hike, ladies and gentlemen, is going to take us to the upper level of this band, which is 5.75. Right now, we are here at 5.5. We're on the upper band of the range. Okay. So if the Fed decides to hike, we are crossing over to 5.75. If it does not hike, which of course right now the markets are not anticipating a rate hike, the rates are on hold. So if the rates being on hold right now, we actually should be having a weaker dollar. But now where you have an issue of inflation likely returning and much stronger inflation now that the rising oil prices seem to be plugging markets, this is likely to change. Okay, the past Fed speakers have not yet spoken about the oil prices, so we have to wait and see. We have a Fed speaker late at 10 p.m., which is Fed Logan. Most probably we're not going to see that much reaction from Fed Logan speaking, but we have to wait also for the data that's going to come out at 11:30. That's towards the close of the US session, which is the API weekly crude oil stock. We should see a higher crude oil stock here. However, like I've mentioned to you guys, as I mentioned earlier, I told you that the US is having an issue of lower petroleum reserves. So I'm expecting that we should have a ramp up of this number. The petroleum reserves most potentially will increase here, which could of course have an impact again on the oil. But Russia, as well as Saudi Arabia, Russia, there was some news that got out yesterday, and Russia said they are going to cut exports by 300,000 barrels per day, which is very, very strong, and they're doing that for the rest of the year. Saudi Arabia has said they're going to cut production by 1 million barrels per day up until 2024. So we should see really strong reaction to that as we go along on the oil prices. So we are going to go through the charts. We are going to start with GBP/USD. So GBP/USD has been having a bit of downside movement, and that's of course because of a rising DXY. DXY has been quite resilient. Last week we had DXY retesting the level for a double top, and again it had a retest of that double top level but broke below it, and then successfully was able to go above it, and DXY looks to be going back closer and closer to October 2022 highs, somewhere around 104, 105. So our OBV here is showing us GBP/USD has managed to break below this descending trend line here, and as you can see here, we are potentially looking for a lower GBP/USD quote, likely towards 1.25. Okay, I hadn't shared my chart. Let me just share it quickly. You should be able to see it in a moment. You should see the chart in a moment. Just wait for the chart to load. I hope you can see it now. We are on GBP/USD. We are going to start with GBP/USD, then we cross over to other charts. Okay, so that's our GBP/USD. So this setup is recent. We had it on Monday. And we had a break of that asymmetrical triangle to the downside. We're likely to see GBP/USD potentially moving lower. There hasn't been indication of GBP/USD potentially moving higher. There's quite a bit of financial distress in the UK, and because of a rising USD, we could see a much lower quote for GBP/USD. This asymmetrical triangle, again, we had a break below it, and we have seen price continuing to move lower. The OBV is also indicating that we could see a much lower quote here. And again, the dollar strength is providing a lot of weakness for this particular quote. The major levels to watch, first thing, of course, is to watch for this level here, which we last saw sometime on the 22nd of August, somewhere around 1.27635. And again, for us to reach there, we have to see how our data gets out with CPI next week, which is the major data we have for this level. If we fail to see a move higher, we are most probably going to go much lower to levels that we saw earlier in the year. We have a report coming out from Barclays, which I'm not able to share on the screen, but I'll just read it to you. Barclays has been indicating here that they are less hopeful on a pound sterling rally, and this is because of weakening and declining economic stats that we have been getting out from there, and we could see the pound having a bit of a sell into the rest of the year. This is because of tight financial conditions and a rising dollar and a rising demand for the dollar. So Barclays also indicated that they indicated that we turn less hopeful on the pound. Said analyst at Barclays, who says consumer demand appears to be fading and the labor market might finally be cooling. While sticky wage growth and inflation imply considerable carry support for longer, there is now less scope for further outperformance, either for the euro or for the dollar. At the start of September, the British pound remains one of the best performing major currencies in the G10 FX space, vying closely with the Swiss franc for outperformance. So most of the data that we have been getting from the pound, further from the UK, is showing us potential declines that are coming in. So this level that I have marked here is a key level for us to watch for the pound, and we could see supply getting into the pound from here, rather demand getting in from around here. But as of now, the break of that asymmetrical triangle again on the H1 is providing us potential lower valuations for the pound. And again, the carry trade seems to be on the side for the dollar. So people are switching over to the dollar denominated assets and less to the pound denominated assets. So we have to wait and see how things progress there. Crossing over to NASDAQ. NASDAQ again, yesterday we had NASDAQ staying quite strong, but one of the things that's going to put a stop to NASDAQ's very strong rally this year is going to be the CPI data that we get out next week. If we get a higher CPI reading, then you can tell for sure that it's likely that we're going to get a lower, potentially lower NASDAQ. So yesterday we had a rally with Tesla, and the reason why Tesla was rallying was majorly because of their constant cuts in their car prices. And of course, rising oil prices usually, of course, provides demand for any EV companies, which of course Tesla is one of them. And of course, if you're likely to pay more for fuel in later in the future, then of course the demand for any energy efficient companies comes in. So that's what we are seeing there. We are potentially going to see NASDAQ breaking this triangle here. If we get any higher headline number for US CPI next week, then you can tell for sure that NASDAQ is going to have a stop to its rally. One of the things that's going to put a stop to NASDAQ's rally is high inflation in the US. NASDAQ was actually having a strong rally this year, up over 40% on the year. And the reason for that is because of slowing or cooling inflation. But now that oil prices are starting to rise, it's likely that NASDAQ could have a bit of a stop to its rally. So I'm viewing how NASDAQ performs within this asymmetrical triangle here, and I'm expecting a break of it to the downside. If we get a break here, we are most probably going to see NASDAQ retesting some of its lows that we had earlier. But most of these areas here will not be reached until we have US CPI coming in later next week on Wednesday. So we should see NASDAQ potentially ranging within this zone and then breaking it to potentially move to these areas here where we had a gap that was filled. And this gap again that we had here is most probably going to be filled with incoming data. The OBV we have down here is also indicating a formation of a descending triangle. And again, any break of this OBV here is going to provide us a potential entry to short NASDAQ all the way to the bottom of this OBV line that you're seeing here. Crossing over to US 30, US 30 had a really nice setup. Again, we had a descending triangle, which we had a break of. When we had a break below that descending triangle, we had US 30 having quite a bit of a sell, and this sell is still intact. Again, most of what we saw with last year's bearishness on the indices was because of that issue of rising oil prices. So if we get oil prices coming back as a catalyst, we could see the Dow selling all the way back and filling this area here. As of now, the Dow downside impact is still quite intact, and we are seeing that even with this deceleration that we're having. We had lower highs here. We had just a bit of a break of this descending triangle around here, but ever since then, we are seeing price continuing to move lower, and we could see the Dow potentially even selling even more to fill these areas here. So again, we could get a quick bounce off this level here, back to any of these areas here, but the most the Dow can do is potentially to test this support level here, and most then again potentially then resume its selling back lower. So it's just a wait and see for the Dow, but the downside momentum is still intact for this one. And again, it's not only this, but most of the global indices are actually showing a lot of downside momentum. Crossing over to gold, we had a nice ascending wedge on gold, and gold broke through that ascending wedge, the downside. And again, the reason that we're having lower valuations for gold is because of a rising DXY. DXY last week had a fairly strong, fairly weak strength last week. And again, even now, gold has been having very subdued strength, and we're likely to see a lower gold as we go along. Very nice break of this ascending wedge has shown us that the downside momentum for gold is likely to continue. We had a very nice liquidity grab around this area here. That was after we had NFP, but ever since we had that grab, we have been having gold having a downside momentum, and that downside momentum is still intact. So we are most probably going to see gold having a bit of selling. Again, next week we have the US CPI data coming out, and if we get any indication of rising CPI, most especially the headline, gold is going to sell all the way to this level that we saw somewhere around 21st of August, which was I think last week, but one, and we should see gold potentially continuing to sell and even take out this level here. On the bigger time frame, we are focusing on gold potentially revisiting levels that it saw in March earlier this year, and those levels are within this rectangle that you can see here. Gold, of course, has been having quite a lot of data that has been supporting into the upside. One of it was the ADP data we got last week, and then we also had quite a bit of data that was coming in that was providing support for this bullion asset here. So we should see how gold progresses there, but the major data that we have to wait for is that CPI data, the one of next week. Going over to GBP JPY. So GBP JPY has been providing a lot of trading potential. And again, within this asymmetrical triangle here, we are seeing a likely move to the upside for GBP JPY. The only thing though is that, as I mentioned earlier, if we get any intervention from the Bank of Japan, we could likely see the JPY selling much stronger than it is selling now. Remember, when the government intervenes, when there's FX intervention, if you are aware of what moves or what affects the FX market, one of them is the FX intervention by the government. It can be the Ministry of Finance, and it provides guidance to Bank of Japan that says you must intervene. If we get that intervention, fundamentally, this is the only thing that can put a stop to any weakness for the JPY. So this is one of the things on our radar. We are going to keep monitoring that to see if this intervention happens. This is a very strong statement. They are saying here that we are watching FX moves with a high sense of urgency. So for now, we have to maintain a bias for a sell or on the JPY. I've been monitoring how JPY is doing within this OBV setup here, which is a rising ascending triangle. And if we see any break above this OBV, then we are most probably going to see JPY having a higher price. But right now, most of the FX dealers are on tenterhooks, and they're waiting to see what Bank of Japan decides. If we see any break of this ascent of this triangle here, then we are most probably going to see JPY having a very sustained sell here. The last time when we had an intervention on USD JPY, it had reached about 150 yen. That was around October last year. And when that intervention happened, they intervened within the FX market domestically. That, of course, then sent shockwaves on international currency movements, because the JPY really gained a lot of value. You can see that it sold and it did almost a move of about, this was a move of about almost 11%, over, this is about over 1,692 pips, and it did that within a period of about a month, okay, which is quite strong. So we should see that returning as we go along. Keep writing your questions. I will handle those questions when we get back. Just keep sending your questions to the chat. I'll be able to handle those in a bit. So I'm crossing over to silver. And for silver, I'm focusing on Ichimoku Cloud. Ichimoku Cloud showed us very good setups, and we had quite a bit of crossovers. We have had a crossover, 2 of them on silver, which is a strong indication of a trend strength for the downside. And we could see silver selling even more intensely, especially when we go into next week where we have US CPI. Silver right now is testing this rising ascending trend line, and we should see a break of it. A nice break should take us to the support level that we saw around July 2023, 12th July 2023. If we manage to break there, then silver could potentially be looking for new levels crossing towards $22 an ounce there. Speaking a bit about Euro USD. Now, Euro USD has been on my radar for quite some time, and what it's been showing me is a number of bearish flags. The bearish flags on Euro USD are unprecedented. They're even actually much more than even on the pound dollar. And Euro USD is in a very strong downtrend and could potentially sell even more. The only thing, of course, is one of the reasons that's providing that downtrend is weakening economic data from the Eurozone, and again, lower valuations for the Euro assets because of the weakening Euro economy. So most investors are switching over to the carry trade, which is on the side for the dollar, and that's providing a lot of downside strength for the Euro. So as you can see here, I've marked my bearish flags. There are quite many. We had one here, and then of course others previously in August. And the OBV is also declining quite tremendously, providing to us likelihood for a lower Euro valuation. So we should see the Euro. One thing, of course, that I can rule out is the Euro reaching parity, which is €1 to $1. But one thing that we can say for sure is that we could see the Euro at least reaching about $1.06 or even $1.05. That one is most probably going to happen. So we should see the Euro ranging within this area and potentially moving lower. So right now, the latest bearish flag we had set up was on the 4th of September, and we had a nice break of this level here to the downside. And right now, we just usually see a bit of intraday retracement back, but we should see the Euro potentially moving lower. The key area to watch, or the key level to watch, is this level here, which we saw earlier in the Euro session. And any break of it would then provide us levels for us to sell towards $1.06. So the demand or the supply for lower levels is seated around here, which is 31st of May. Every single area of every single demand area that we have tested for the Euro has been rejected, and we have been having quite a lot of liquidity grabs to the downside, which is showing us that most traders, even aside from the retail traders, are actually looking for the lower Euro valuation. The banks have also been providing a lot of bearish outlooks for the Euro. This is because of weakening data from there. And the ECB has not indicated to us what's likely to happen as we go along. We have to wait for September. But if, again, we are in September, but we have to wait for the ECB meeting, which is later in the month. If we get an indication of rate hikes, then that will provide some support for the Euro. But if we don't get any rate hikes on the Euro, and again, the reason why they might hold off having any rate hikes is they do not want to make financial conditions much tighter than they are right now. Financial conditions in the Eurozone are quite tight, and the economy is not looking good. There's stagflation in the Euro, and we are seeing that biting the Euro quite strongly. So we should see how things progress here. So for oil, again, oil has been having quite a lot of buying momentum, very strong buying momentum. We had a crossover with the 50-day and the 200-day moving averages. We had that happening when oil was at about, it was actually somewhere here, when oil was at about $80 a barrel. You saw there was a crossover of the 50-day and the 200-day, where the 50-day went above the 200-day. And when that happened, that provided to us an indication of a likelihood for a higher oil price. And of course, that the upside momentum for the oil price is quite intact. Technically and fundamentally, oil is looking for higher prices. So we should see oil moving much higher. Now, crossing over to the daily time frame, I just needed to point out a few areas here for us to monitor. So on the H4, we have seen that oil actually broke this descending trend line, and it has potentially been moving higher. When you go on the daily, you can also see that actually oil is still having that strong momentum to the upside. So the areas that we have to watch are this area of $91 a barrel, where we had a nice double top there and then a bit of a sell-off. The next level for us to retest is this level for 91. So any oil bulls right now should be looking for buys, potentially taking us to this area here. There is nothing right now that is supporting lower prices for oil, and oil we can wait for is higher and higher prices there for oil. So we should be looking for some trades there for oil, looking to the upside. Right now we have a setup of an asymmetrical triangle with a rising trend line and a descending levels here. If we get any break of this symmetrical triangle, then we should get a retest of this demand level here, which of course we have a very nice bullish order blocks, bearish order block seated there, and any break of it could have oil racing without hesitating all the way to 89 and 88 to 89 dollars a barrel. So I'm going to quickly look at USD/JPY. So USD/JPY is providing some really good strong momentum to the upside. And again, if you check it out on the higher time frames, you can see that the momentum for USD/JPY has been quite strong. However, the news that we have gotten from the government of Bank of Japan is that they are potentially going to have some interventions. And if these interventions occur, then we should see some strong selling for this particular currency pair. However, the strength for the JPY might be subdued and might not be that strong because of a strong DXY. So before I handle the questions, I just want to quickly take us to the DXY so that we see how the DXY is doing. If you check the DXY on the daily, you can see that we're actually having a rising trend here. And the DXY, the last time we saw some good setup for it, we had a formation of a double top, but this double top has failed to work. And it's much as we had a test of it, we had a break below it and a nice takeout, retest and take out of that level. And right now, DXY looks like it's positioned to move all the way to this level of 106, which we saw in November last year. So DXY is having very strong momentum and could potentially keep moving higher as we go along as we go along, and even as you wait for the CPI readings. So without wasting time, let me just look in the chat and see if we have any questions there. So let's see what we have here. Hi Jack, hi Humphrey, hi Lucy, hi Ivy, hi John. You guys are almost welcome. Hi Jessica, Lemuel, you're welcome. Paul, you're welcome. Jessica, you're saying, how do you mark important levels for possible entries on the 15-minute chart? So for me, I focus on intraday highs and lows. So on a 15-minute, what you're doing is you focus on intraday highs and lows. So you're looking at the Asia highs, you're looking at the Asia lows, you're looking at the demand levels at each of these particular levels. And you look for retests of these levels in the US session. So if I get a retest of a high, then I'm looking for a buy. If I get a retest of a low, then I'm looking for a sell. So that's how I mark my lines. So I'll mark my trend lines specifically using that. And again, usually when I'm setting my levels, I also make sure that I focus on what's happening on the calendar, because the calendar will provide to me where we're likely to progress. So crossing over to Jack, you're saying, hey Jack, hey Norbert, I said hey Jack, hey Norbert, where can I get footprint charts? So can you please just let me know what footprint charts are? It's my first time hearing about footprint charts. Can you please just talk about footprint charts? What are those like? I think you should be able to find them on TradingView. TradingView has quite a number of charts. You have the Renko chart, you have the line chart, you have the the candlestick chart. So there are quite a number of charts that you can look out for there. I've checked AUD GPP numbers from the report, and weakening, including terms of trade, employment numbers, inflation going up. Hey, Apollo, does this mean AUD will be under pressure for long? So AUD is having a lot of sustained weakness on the back of weakening Chinese economy. China has been having a slump on different levels. The industrial production has been quite low. It came in much lower. Their Caixin PMI that came out yesterday was actually low. And again, when we check out the data that we're having from the Australia dollar, it's also providing us some momentum for the AUD to potentially keep weak. The AUD data that we got earlier today indicated to us that we're having a slight increase, okay, above the forecast, but still a decline from the previous. So that's a contraction of about 0.3%, which of course does not look good. Much as it's not negative, okay, as long as that the GDP number is coming in slightly lower, then it also shows us that we're having, that decline happening. So let's quickly continue there. Apollo, you're saying, and with strong numbers coming from the US plus interest parity, what's your longer term view on a DXY? DXY long-term view is a buy for it. And the reason for that is because the demand for the dollar is high. Rising oil prices usually provides a higher valuation for the dollar. The last time when we had oil prices rising, that was last year, DXY reached over 114 points or dollars on the index. And we should see it moving even higher there. And again, when you go on TradingView, you should be able to see that the correlation with oil prices and the dollar are actually there. If you add it from here, if you add the US oil, you should be able to see that we're having that pattern of rising oil prices along with a rising dollar. So that, of course, should allow us to be able to see. So as you can see there, the dollar rises with oil. So any higher oil prices globally usually provides a higher value for the DXY. So right now, I would be having a bullish bias for the DXY, and medium term to longer term is providing a potential higher valuation for the DXY. And again, for the Fed, the issue with the Fed is that they do not want to have inflation coming back. And the issue with inflation is that if you have high oil prices, then inflation can still come back to bite, and it can bite quite seriously. On gold, please explain how higher inflation numbers will weaken, noting that Fed is unlikely to raise rates. One Fed speaker alluded to this, Juicy. Okay, so on gold, remember if we have a higher headline number next week, which of course we are likely to have because the US oil prices are actually at the levels that we last saw sometime last year around around November last year. So everywhere around, everyone is talking about rising pump price for the US. So if you check even online, you'll be able to see that actually oil prices are rising, So here we are seeing US gas prices climb to the highest level in nearly 10 months. Okay? So things are actually quite looking, we should see a higher a value for the headline number next week. And of course, higher inflation in the US is dollar bearish. So we should see that happening. Now, the only reason why gold should rally is because of fear. Because remember now, gold keeps switching from being risk on to risk off. So it could rally on risk on. So if we get any risk on sentiment entering into the market, then we should see gold then starting to rise. Any strength in DXY will potentially be fueled by higher headline numbers. Okay, so if we get higher CPI coming out next week on Wednesday, the headline CPI, then we are going to get stronger DXY. Because remember, higher inflation is usually bullish for the DXY. But in this case, the market will be switching from risk on to risk off sentiment. Yeah. So for Apollo, your question of conflicting views from yourselves regarding DXY strength, we should be having a relatively stronger DXY on the back of higher inflation. Yeah. And again, if you go to the treasury yields, you are seeing that there's that increase in the yields, which of course is also partly also providing some upside for the DXY. Yeah. So Lucy Nganga, you're saying what's your target for GBPUSD? For the GBPUSD, we're looking at key levels closer to, again, right now we are seeing that it has currently broken our symmetrical triangle and could potentially move lower. So right now the key level to watch should be a retest of this level here. Once we get a retest of this level, then we could potentially have it selling all the way to this previous support level here. And once we take out this level, where we have a really nice, strong bullish order block, rather bearish order block there, then we should see, us taking out this level and potentially having a breaker block all the way much lower there. So for right now, we have to wait, and it's just a wait and see game. You also need to wait for some US session volume to get into the market and potentially move this even lower. Yeah. Okay, I think I need to show that again. Lucy, I think maybe you aren't able to see the chart. Let me just show that to you quickly. So we have a very strong bearish order block seated around here where we have very strong demand. And the last time we had the demand coming in, it came in somewhere around 4 p.m. That was on the 5th of September. So we should see how it retests around here. If we get a break below this left support level here where we have demand, then we should see this level taken out and potentially having more selling pressure to the downside. Right now, the market is providing a lot of bias, bearish bias for the pound, and that of course will reflect even in price as we go along. Yeah, so I'm sure most of your questions have been answered. Jack, I still haven't heard from you regarding footprint charts, but maybe you could try and check on TradingView. TradingView has quite a number of charts, so you should be able to find the chart that you're looking for there. Awesome. So I wish you all an amazing trading day, and I'll see you all again next Wednesday for the next market snapshot. Have an awesome trading session today.